Felix here, and welcome to Thursday morning pre-market. Only 2 more trading days until the Christmas break, and potentially it could be a big one, especially tomorrow. The whole market is shifting again to being severely short. And what does that mean? Well, you might remember from November, if everybody's short, there's really only one way to go from being short, right? So none of the above, all the below are, of course, financial advice. You know that by now. Be careful with decisions you hear from crazy people on YouTube. Just come to your own conclusions, make yourself a better investor. That's really what this is all about, making you smarter rather than telling you do this or that or the other. So futures are down a little bit. This is probably to be blamed on Micron, who are reported fairly miserable outlooks on earnings and sort of confirmed the earnings recession suspicion and rumors. If you look at the market here, pre-market, Mullen doing its usual madness thing. Chinese equities are rebounding once again. Barber up almost 2% to $89. Netflix up 1% to 300. It's an important mark. NIO up 1/3%. Tesla up 1/3%. So the market is on the flip side. What is down? Hillian down 2%, Nvidia down 1.5%, Meta down 1%, American Express down 0.9%. So that sounds a little bit like earnings fears, retail fears. Amazon down 0.7%, Apple down 0.7%. And we talk about Apple because there's a lot of stories about how Apple is the one stock out of the big tech that have actually survived 2022 relatively well. And is that therefore the next one to fall? Let's look into that a little bit more. QQQ at the moment down 0.where did it go? 0.7%. I thought I just saw it. It popped up my screen. 0.6% down on the Qs, which is, a little bit negative, of course. Any major data out this morning? Well, we've got the quarter-on-quarter GDP prices and PCE numbers out and so on. Now, these are just the final numbers. We always get estimates first. Those are the numbers we kind of, the market moves on, and then you get revisions. If the revisions are significant, then that becomes an issue. But most of the time, it's sort of like, continuing jobless claims on the December 10th. How important is that exactly? It came in, 1672. I don't know what was the original number. I think it was maybe 1,000 more. I don't think there's a huge difference there. GDP growth, final Q3 coming at 3.2%. Really? Okay. Core PCE 4.7%, which previous was 4.7. So I don't think December 17th jobless claims 216,000. Again, this number. I find this number hard to believe. It just isn't really moving up at all, which I find slightly baffling. But there we are. You know my feelings on US job numbers. I think they are massaged, Swedishly massaged to a very, very deep level. A little bit more important tomorrow, we're going to get out the PCE number. That's important. That's the Fed's favorite inflation metric and the last big piece of data we get before Christmas. That is. So let's go into a little bit more depth there, what the market's doing, where the support lies, and so on. And I'll show you a couple of charts, as I usually do. Short flows are significant again. Not quite the highs we had in November, but we're near it. So if I just draw a little line from, may I get a straight line? Here, and zoom in a little bit on this for you. Can you see that? Yeah, I think you can. We are at the moment right here. That was our, I want to say, October-November high, July high. So we are pretty near to those high points again. And these are shorts, right? So if they're up, it means the market's typically down. And when they start to unwind, the market rallies up again. So potentially there is a nice setup here for tomorrow. They're getting rather extreme against this JP Morgan short additions. And they're not quite as lopsided as it was in October, as you just saw on the chart. But it's still pretty significant. So we're 1.3 standard deviations off versus 1.8 in October. So we're pretty close to like the peak levels again, and that's important. Also, if you think about going into January, what's happening here? Are we going to get that January massive inflow? Yes or no? Is Santa going to show up before Christmas or after Christmas? Let's look at all those numbers from a statistical point of view rather than anything else. If you spell Felix backwards, it becomes Mullen. Oh, God. Enough with the Mullen jokes. I've never bought Mullen. I've never owned Mullen. I probably never will. And one should never say never. Talk to me in 5 years. It might be a Mullen portfolio. Who knows? But at the moment, no. I'm not really into penny stocks in any way, shape, or form. Why do you call them penny stocks? Shouldn't they be called cent stocks? You Americans out there? Someone explained that to me. He's on that side of the pond. Right. In the January, after the 13 down years of the Nasdaq back to 1972, the index was up on average 5%. So typically in January, after you've had a miserable year like 2022 has been for equity investors, not for traders. Traders had a marvelous year. The Nasdaq rebounds 9 out of 13 Januaries. And in the year after, the down year, the index was up on average 19%. Now, before you put all your money into the Nasdaq, listen to the rest of this video, because there is a different way of looking at this as well. But there's a win rate of 77% of being long Nasdaq after it's had a miserable year. We've only had 2 straight down years since, that was 73, 74, 2000, and 2001, 2002, which was therefore a 3-year period. 2000.com bubble. We talked a little bit about that yesterday. Now, when Santa meant to show up, let me make this as big as I possibly can for you. So Santa last year came to town on the 27th. And you might be thinking I'm making this up. I'm not. In 2020, he came on the 24th. In 1918, he also came on the 24th. Now, he's not going to come on the 24th, is he? Because that's a Saturday. So he could come tomorrow. That would be the best thing. Or if he goes back to the North Pole, he typically also does that pretty quickly on the 3rd, the 5th, and the 4th here the last 4 years. How big was the rally? Typically somewhere between 0.4 to 1.4%, which is significant. Is it going to come? Well, let's look at some numbers of that. Before we do that, I want to encourage you to grab your last places for our masterclass on the 27th, the Santa masterclass. This is for 5-figure plus investors only. So if you've got 5,000, 5 figures, 6 figures, 7 figures, 8 figures, 9 figures in your portfolio, come and join us, and we'll talk about how we can earn enough money with options trading in a low risk environment. Kind of a way to quit your 9 to 5 and retire, or if you're already retired, or if you already quit, or if you just want the option of doing either, or just want to build an extra income stream, you're of course also very welcome. It's on the 27th at 9 a.m. Eastern time. And so felixfranceorg/live, that's the link. Go over there and sign up for it. Now, this is why, and Apple is really important. Apple obviously being super important to the NASDAQ as well. Apple versus Meta, Amazon, Netflix, Google has massively outperformed this year, right? So the blue line up there is Apple. The rest is our sort of misery FANG stocks. So why has Apple done so well? And there are some reports out today, and you might see that on social media saying, well, Apple is going to be next. I know it's the last man standing, but it's going to come, someone's going to kneecap Apple come January. There is a reason why Apple hasn't come down. And I showed you this chart yesterday, but I just want to highlight this again. Buybacks plus dividends for Apple exceeded $100 billion in 2022. So they've bought a very significant part of their own stocks. And how do they do that? Well, they've got massive free cash flow. They're highly profitable, and they've got a very, very loyal user base. That's a big moat. The moat of all moats, basically, the Apple moat. And that's why they've done better than the others. Very, very simple. Not actually the underlying performance or any of that. Now, there are some headwinds. Yes, the sort of deglobalization and manufacturing costs going up and China manufacturing issues and all of that. So there are some issues there, but it's still come down a bit. It's not like it hasn't come down at all. It's just come down less than the rest, right? That was the downside here. And then if you look at, say, a Meta, what happened to my pen? There we go. Look at Meta, which is the second green line here. You can see even from, without any kind of measuring, that was obviously a bigger drop, right? Longer line, a bigger drop. So, there we are with that. Now, the January retail flow, which is usually what drives January markets. So we get about 130% of the entire year's retail flow going into markets in January, because pension funds and all that kind of stuff chuck all their money into 401ks and all of that. Now, The one time that that doesn't happen is when unemployment goes up, because people have less money, people are more worried about it, people are keeping some of that cash. And the second item is higher bond yields might also prevent that. So the January rally might not be quite as big from the inflow point of view as some might expect. So that's something to watch out for. Definitely, I'm gonna track quite carefully the retail flow in January to see like how to be positioned. Now, another step back to our headline, which is short squeeze potential. There is something called the put call ratio, which basically means puts generally mean you are negative, right? You're bearish on the market. Calls generally mean you are bullish, positive on the market. It's a simplification, but that's generally what it is. Now, people, of course, also buy puts to hedge, but still they hedge because they're worried about going down. This is sort of a bit of a simplification, but there we are. So the put call ratio is this here. This is PCE. You can look this up on most charts, and it's up here. And this is going back to this down here is September 2021. So you can see it's definitely the biggest put call ratio we've had all year. So what happens when you get these big put call ratios, and do they inevitably unwind? Well, let's look at the previous one. So this one here was in, what was the date? In June, July. And the S&P had just tanked. So everybody hedges. And this is the idiotic thing with the market, is that everybody hedges when the market crashes. It's better to hedge when the market goes up because the hedging is much cheaper. But for some reason, people haven't quite caught on to that yet, even after 100 years of the New York Stock Exchange or whatever it is. So it then shot back up, and the put call ratio basically climbed back down. So that was what happened there. And then here, and I suspect that was October, but let me just make sure. Yeah, that was October, September, October. We had again, sorry for making you seasick with the scrolling. We again had a very, very high put call ratio here, and the S&P had just tanked. And the S&P then recovered, did a little bit of this, and then went back up as the put call ratio basically collapsed. So what are we seeing here? Well, the S&P is coming down. That doesn't mean it isn't going to come down a little bit more. But again, if this unwinds, you would expect potentially for the S&P to do the same thing again. So that's kind of what I'm watching out for, is how best to make money out of that with either volatility or a simple long trade. On something like that there. And that's what we've been kind of doing all year around. We don't necessarily particularly care which way the market goes. We can make a lot of our money simply out of understanding which way volatility moves and so on. And that's netted as a 140% or so return this year on our capital employed, which is pretty good. And it's a lot better than my stock portfolio, which is still down, I don't know, 8-9% or something like that. So you can learn exactly how we do that. I literally give you the full prescription, the full trading protocol with everything in it, the entry, the exit points, the rules, the theory, the practice. Watch me trade live, see my trades and everything else. For you guys with a 5-figure portfolio, come and join us at felixfriends.org/coaching. You have access to me directly. You have access to my amazing coaching team who are investment bankers. And yeah, check it out, felixfriends.org/coaching. Just watch the video on that page, book a call with us. We'll walk you through it, explain it to you, answer all your questions. And this is zero sales pressure. I just want people who actually have a desire to make 2023 better, have a desire to become more financially independent, and have a desire and interest to understand how markets actually work. Not the nonsense that you get from sort of trade alert apps and things like that. We don't really go in for that. We just want to show you and explain to you how things actually work, so you can be independent. You will not be dependent on us. If you're not quite there yet with the 5-figure portfolio, don't worry about that. We got you covered as well. We have a pre-recorded course. It's like 100 lectures. You get to watch me trade live as well every week, and full access to everything, nothing held back. That's at felixfriends.org/options, so check that out as well. There's a coupon code for that you should use. It's guarantee. And that guarantee gives you not just 41% off, but it also gives you a 90-day guarantee. Literally just take the program, go through all the materials, put it into practice, actually use it. And if at the end of that you said, hey, Felix, sorry, this wasn't for me, then no worries on that front. We'll give you your money back, because again, I want you to walk away from it happy. I want you to feel like this was worthwhile. I want you to feel like you're going to actually use this and put this into practice, so that you are encouraged to make more out of your money, because most of your income should be coming from investments. It should not be coming from your salary or your business. And that's where people go wrong. And that's why people don't really, a lot of people don't really obtain true financial freedom. Now, excuse me, I'm quite thirsty today. As you can tell, I'm drinking this strange brown broth. This is herbs, Chinese herbs, actually, which keeps you healthy. So they have a quite nice concept that they don't wait to get ill before they take things. They just take it all the time to always be healthier. And I quite like that. Prophylactic thing, so you don't really... I haven't had a cold, I'd say, in about 6 years, except for COVID. I did get COVID traveling. So there is no fear, I say here. Well, there might be on your side, but no, VIX has come down a great deal. So VIX, the fear index, has come down a lot. So let me just get a suitably colored pen. This is VIX down here, fear index. And then this up here is MOVE, which is the bond fear index. And that's also come down a lot. So still at somewhat elevated levels historically, but I'd kind of expect us to stay at elevated levels for reasons of options trading is becoming a lot more popular. There are a lot more 0-day, so same-day options trades going on, and things like that will keep volatility a little higher. But what does that mean? Well, typically, when fear dissipates and VIX goes down a lot, typically the market picks up, right? So yeah, that's typically what that says. It doesn't mean it's going to be necessarily saying. So again, here Morgan Stanley talking about funds being short, which is kind of how we kicked off this this call about, are we going to get that short squeeze? So a year ago, last year, this time, the futures desk at Morgan Stanley says that the buy side held a long position of 167 billion. So they were like invested across all US equities by 167 billion, which is fairly significant. Now, right here, right now, they are short 5 billion. So that's a 172 billion difference from last year to this year. Not quite an extreme position. I mean, it's been a lot worse. They've been like 60 billion short. That would be extreme. But it's significantly shorter than on average since like 2010. And then here again, this put-call ratio chart that I just showed you in a slightly different format. And this is definitely telling you a story that people are definitely worried things might go down, but possibly people are also over-worried. So if Santa does come to town tomorrow, there is hell to pay on these trades, because they're going to want to unwind those really quickly. And when they do that, the market rallies, right? That's a possibility, not a promise, but definitely a possibility. If you haven't signed up yet for our masterclass, it's live on Tuesday on the 27th at 9 a.m. Eastern at felixfriends.org/live. You have to sign up for it. Seats will run out. They always do. The last one I did was 6 months ago. This is live. You can literally ask me questions. We'll do a massively long Q&A at the end of that. I'll answer every single one of your questions. Let me just see if I've got any questions here, guys. Do chuck them out. Again, I might be missing out some things, otherwise repeat them. You drink warm water, herbs and stuff. You're more Chinese than Chinese. That's quite funny. I work with a Hong Kong chap. We are working on our software together, partner. He's a Hong Kong guy, but he lives in the US, and he was joking about that yesterday, that I was more Cantonese than him, which obviously is a bit of a joke. But Stephen says, joining Felix's coaching program is the best investment decisions I've ever made. Stephen, I am very, very gratified that you feel that way. And I'm very grateful that you express it here as well. Thank you very much. And I'm very, very glad that you're getting some real benefit and some real insight there. January is going to be really, really fun, because it's going to be a return to markets with lots of volume. We'll be able to trade properly again. And hopefully over the Christmas period, all you guys have a little bit of time to digest some of the wealth of information that we give you guys in the coaching program. So just take the holidays to like study a little bit, mess around with some things. And that's what I'm doing at the moment. I'm not trading anything, but we're messing around with things where we're doing some back testing. We're doing some, random trades, but in paper. We're just playing around with things, and always good to get some experience there. But Stephen, yeah, I truly appreciate that. And if you wish to join Stephen, in that program, then feel free to check out felixschwenzer.org/call. Read through the webpage. That resonates with you, book a call with us, and you'll be talking to probably Cheryl, who's worked with me for like 15 years. Absolutely marvelous. US trained accountant, knows exactly what I do, probably better than I do, and we'll just walk you through it and answer all your questions and let you know whether that's something it's going to be a good fit for you. What about the rumor of Microsoft buying Netflix? I don't think, look, if they have regulatory issues buying Activision, imagine the regulatory issues buying Netflix. I don't see the US government really going for that. I very much doubt it, unless it's a negotiating ploy. What if we drop the Netflix takeover? Will you let us have Activision? Maybe that's not some smart lawyers concocted on Wall Street. Stephanie, stay away from penny stocks. Absolutely. Yeah, I always think pennies. Did the US ever have pennies? I mean, was there a denomination below cents that was pennies, or is this like a British hangover? I'm not quite sure. What about Microsoft? No one mentions them surviving. Well, I think they'll be all right. If you look at their cash flow and their margins and signing up 2,000 new clients a day, I think they'll be just all right. Bought a new iPhone to support them. Well done. Apple shareholders will like you for that. Right. Let me see if there are any questions down here. Penny and cents are the same, Stephen. Okay. Oh, you call it the penny as well. Okay. I was not aware of that. I thought that was a British thing. See, I learned something every day here. Looking forward to the live masterclass, Stephanie. Brilliant. I'm glad you were signed up for it already. If you haven't already yet, guys, here is the link again, felixschwenzer.org/live. Christian, also very kind comments. Thank you. I really genuinely think the community we have built is absolutely fantastic. And I don't take the credit for that. The credit's entirely on you guys, because while we, of course, have teams in there and coaches in there who help you out, there's so much generosity of sharing and discussions that I see between students. It's absolutely fantastic, Christian. So I'm very, very gratified that you guys have built that, really. It's a British thing. Americans steal all our words. That's quite funny, yes. Two great nations divided by a common language. Isn't that it? Clover Health sarcasm. Penny stocks are lower than $5. Yeah, which is, again, is something that doesn't really make sense, right? So somebody should explain to people that, yeah. No, I don't really go for that kind of stuff. Okay, we're not gonna get into American bashing here too badly. We just have a little bit of a laugh with it. But yeah, I think the kind of key takeaway here at the moment that I would say is put call ratios at an actually a 20-year high, right? Massive. And what does that mean? It means a lot of the market is freaked out. If you can hear honking in the background, they do this thing here. They have a beautiful old, I think it might be a Rolls Royce or something, driving around. And they have three people sitting in it dressed as Santa, and they sing French and Italian Christmas songs with guitars. The bizarrest thing. Very, very nice. It must be a government organized thing or something, I think. They do it every day. So British people are weird indeed. Very, very weird. And I can say that because I'm not. I'm German, actually, which, ask a British person on what they think of Germans. That makes people really, really uncomfortable. So there we go. So yeah, going back to a few things is essentially, this is kind of a lot what we're looking at here is when you have these massive put call ratios, typically they do get unwind at some point in the near future. And typically the market then kind of has that rally. So I think watch closely what happens tomorrow, because that's typically when Santa comes to town. And that might sound a little bit silly, but there is some statistical truth to that. Let's have a look at the ES futures, the S&P futures here, and see how they are doing this morning. They are down. They are down 0.8% to 3,873. Now, our support line is at 3,800 essentially. So we're still trading significantly above that. And if you look back over the last 24 hours or so, this isn't actually as big a move as you first thought, right? Because we went up at 10 o'clock yesterday morning by that. So that doesn't actually tell us that much. What about the QQQ? We'll look at that as well. Again, this is a minute chart. It's down 1.1% here pre-market, trading at 270. Now, what's our put wall? It's 270. Ouch. So put wall here, 270, is a support line. And that might sound a little counterintuitive. And that's just right there. So watch out for that support. Yesterday, that held up quite nicely in the morning pre-market, and then at like 9:35, and then we kind of bounced off that. So that should trigger a bounce off. If it doesn't, yeah, go and wrap some Christmas presents or something and take your eyes off the chart, because if it doesn't, then that's not really not good. The important thing is German, Brits, and Italians are all against the French. I would probably think it's more the other way around. I think the one thing that connects the Brits, the French, and the Italians is their loathing of the Germans. Wouldn't you say so? They probably won't admit it in public, but in private, I think that's fairly true. Why was GDP a bad read today? Was 3.2. So that's kind of old data. We get these GDP revisions. These are final numbers. They are not, let's have a look at that. Yeah, these are basically just revisions. So it's kind of like not that important. I find a 3.2%. I mean, these GDP numbers it's weird how they calculate them. I would say, I think it's very weird how they calculate them. I don't think that's the biggest story today, to be honest with you. Let's have a look at if Bloomberg makes any comment on that. It's all about Bankman-Fried, and apparently his former friend has just turned on him. So yeah, that's going to be a tough one, isn't it? I think, unfortunately, and maybe I don't know, depends on what side of the story you're on. He could be the scapegoat for the whole crypto saga here, right? It was always going to be somebody, and it looks like it might be him. I wouldn't want to be in his shoes. Zelensky in Washington as well. So yeah, there is something there. If you want to send $100 billion to somewhere to start a war, fuel a war, then let's not dwell on politics. Use job applications for jobless benefits were little changed, it says. And then we, of course, got the Donald Trump tax story. And again, that's probably not a popular opinion, but if you don't like the tax laws, change them, right? That's what people in government are for. People are going to take advantage of tax loopholes, especially if they got lots of money. It's worth it for them. So, there you are. Kevin O'Leary is pushing for regulation. Yes, the man who was pimping crypto like nobody else. Who is he going to flip on? I'm not sure there's anyone left to flip on. Where's my phone is vibrating? Somebody's on the website asking a question. Francois, you want to sign up for the Tuesday 27th? Okay, you got to go. So I'm just going to type this in here. Francois, if you're watching, you got to go to felixfriends.org/live. You got this little live chat on the website. If you ever want to reach out to us, you can, and you can see it literally pings up on my phone. So there we are. The government is the tax loophole. Yeah. Plus, I mean, the whole tax thing, like, what are you fueling, right? You're fueling wars, like all these weapons sent to the Ukraine, a lot of them are showing up in African civil wars. Like, who's making money out of this? Lockheed Martin, Raytheon, those kind of guys are making money out of this. And I guess they just miss the Afghanistan, the Iraq drip into their budgets. So now we've got another one, right? There we are. Right, there we go. So if you have any other questions, chuck them into the channel right here, right now. It's your last chance to do so. Otherwise, there'll be another opportunity tomorrow. There's also a story out here. Tesla dangling 7,500 discounts to boost deliveries, which is Is that just part of the long-term strategy to just be a really big mass producer, or is it a bit? It has to do with changes in U.S. tax credits that take effect in 2023. Oh, I see. Because basically next year there'll be a 7,500 credit tax credit. So no one's going to buy a Tesla this year if they can get $7,500 off. So Tesla has to offer that to basically not tank their December sales. Okay, that makes sense. So subsidies, government intervention, it only ever screws stuff up, right? These headlines: China seeing likely 1 million COVID cases, 5,000 deaths in a day, not confirmed. But yeah, it'd be kind of interesting to see whether or not that changes or turns around in terms of opening. Allegedly, they are going to introduce, 3-day hotel quarantine only, sort of a little bit following the Hong Kong opening. We'll have to see how that pans out. So far, I think KWEB and so on, I think they had a pretty good day today. They went up 3.8% today. But fizzling out a little bit now at this time of the morning. So watch that story. Yeah, the Toyota side of the story there is an interesting one, isn't it? They're basically saying, they are building a lot of EVs in fairness to them, but they're just saying we're not going to focus entirely on that because we're not sure it's proven technology. There we go. Right, guys, I appreciate you tuning in. I appreciate you watching. Thank you very much for that. We'll be live again tomorrow, last one before Christmas. Come and make 2023 a better informed, funner investment year. Join the community at felixrenzer.org/call. Give us a ring if you have at least a 5-figure portfolio, and we'll walk you through our coaching programs and how we can take you from wherever you are as an investor or trader to making more informed and consistent returns. Felixrenzer.org/call. Thanks very much for tuning in. I wish you a beautiful day, and I hope to see you on the next one.